understand that one. I don't think India will do that.
In our special series, the Unicorn Health Check, we're going to look at India's startups in the Insurtech space. Now, the Insurtech segment got a significant boost during COVID and is only maturing as more categories of the industry are starting to attract funding and leverage technology. India appears to be valued higher by investors due to higher operating leverage and the perception of greater proximity to customers. Globally, funding to Insurtech has grown at a CAGR of 37% during FY17 to FY21, while funding to Indian Insurtech companies has grown at a CAGR of 34% during the period. Now, the total insurance market in India is projected to grow from 8 lakh crore rupees to about 33 lakh crore rupees by FY31 at a CAGR of 14.9%, aided by increasing penetration levels and government initiatives. Let's start with Policy Bazaar, which is an app-based comparison platform for life and non-life insurances. The firm, which is backed by the likes of Temasek, Tencent and SoftBank, is valued at $2.4 billion. Now, Policy Bazaar's parent firm, PB Fintech, saw its losses narrow to 87 crore rupees in the third quarter of this financial year versus 298 crore rupees for the same period last year. Revenue from operations surged 66% on a year-on-year basis to 610 crore rupees. The firm's credit business hit break-even in the December quarter ahead of expectations. Now, the insurance premium business saw 70% year-on-year growth to over 3,000 crore rupees, while the credit disbursal business saw growth of 57%. Now, PB Fintech's expenses increased to 766 crore rupees. The company said that it expects to become EBITDA positive by the fourth quarter of this financial year and is confident of delivering the first full year of profits in 23 to 2024. Now, let's go to the next one, which is Digit Insurance, which is essentially a platform for auto, health, travel and flight delay insurance and is valued at $4 billion. The firm reported total revenues or premium of over 5,200 crore rupees for FY22. However, net losses widened to 295 crore rupees in FY22 as against 122 crore rupees in FY21. Now, the firm sold 7.76 million policies in FY22. This was driven by higher demand from motor, property and health segments. Go Digit Insurance also refiled draft papers for a $440 million initial public offering after addressing the market regulator's concerns related to the company's employee stock plans, which had initially stalled the offering for months. Finally, digital insurance firm ACO has raised a total funding of over close to $460 million. ACO's revenues soared 2.37 times to come in at over 1,300 crore rupees. Income from the collection of the gross premium contributed 61.5% of the total revenue, which surged 2.3x to 826 crore rupees in FY22. However, the General Atlantic-backed startup saw its net loss increase 3 times to 483 crore rupees versus 132 crore rupees in the previous fiscal. ACO spent 1.37 rupees to earn a single unit of operating revenue. However, the improvement in unit economics augurs well for the firm. Aggressive marketing aside, feedback on claims handling has also been positive. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side.